Hello everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals and driving the markets currently. So Peter, volatility in the markets remains at rather low levels, right?
Yes, volatility yesterday at least tended to remain at rather low levels. It was characteristic that despite the US CPI rates for June accelerating more than expected, and actually may have taken the markets by surprise just a bit, but still the US dollar remained relatively stable. There was not much volatility there. Stock markets tended to drop a bit. However, once again, they recovered the lost ground, so the in the end effect was very low. I would also note that BOC delivered a surprise 100 basis points rate hike and maintained a very, very hawkish tone in its accompanying statement. Yet once again, market reaction was quite low. So overall, yes, I would dare to say that volatility is rather, I would dare to say low once again.
Okay, are US stock markets still dropping?
Yes, US stock markets are still dropping. I would be noting that overall the cautious sentiment is still present in the markets, especially given that the US CPI rates accelerated, once again showing that there are strong inflationary pressures in the US economy, which in turn could force the Fed to actually tighten its monetary policy at a faster pace, and that could shrink the opportunities for growth in the US economy and thus could have an adverse effect on US stock markets, especially for high-tech companies. I would be highlighting also the earnings releases. We make a start with the banking sector, and we have Morgan Stanley, I think that's today, and tomorrow we have also Citi. So depending also on the results of the earnings reports, should there be a reflecting in the earnings reports of the slowdown in the US economic activity, we may see that also affecting adversely US stock markets as well.
Interesting. And how about gold price?
Well, gold's price jumped a bit, but it was nothing decisive. It was more like gold's price taking advantage of US dollars and activity. And I would dare to say that we may see, despite some stabilization over the past 1-2 days, we may see gold prices weakening further, albeit we have to note here that on a technical level, gold prices are already at low levels. They have not seen such low levels since September last year, so we're talking about a 9-month low here. We'll have to wait and see to actually understand how the fundamentals tend to affect gold prices. On the other hand, though, we have to note that the strengthening of the US dollar seems to be ongoing, and should that be the case, we may see gold prices dropping further.
And the commodities front, are oil prices still dropping?
Actually, no, they seem to have halted that drop, especially WTI's price. It was a surprise, and it was a surprise because recession worries are still present in the market. So on the one hand, we would expect fundamentally oil prices to be driven lower. Also, we had EIA's crude oil inventories figure, which showed another buildup of US inventories, which more or less implied a slackened demand for the commodity, which under any other given circumstances should also drive oil's price lower, given also that we had another buildup of inventories reported by AP that was on Tuesday. Yet there was some kind of stabilization. There seems to be a worry about the production capacity of OPEC members especially. We have Libya and Nigeria, which have very limited production. At the same time, the Saudis seem to have reached their capacity limits or are producing pretty near those limits.
And what do we have on the calendar regarding upcoming releases?
Well, we already had Sweden CPI rates. In the American session, we're going to be highlighting the weekly US initial jobless claims figure. Interestingly enough, the indicator seems to remain stuck at around 230K, 240K. It's a level which does not seem to be decreasing, implying that maybe the tightening of the US employment market has started to lose some steam here. And that would be a negative for the US dollar. I would also note that from Canada we get the manufacturing sales, those are for May. However, the highlight I think is going to be tomorrow during the Asian session. We're getting from China the GDP rate, that's for Q2. A wide deceleration is expected. It's expected to drop to a little bit above 1%, that's year on year. And I think that would be reflecting more the lockdown measures which were employed in China to curb the spreading of COVID-19 and led to practically a slowdown of economic activity. On the other hand, though, we are also getting from China the industrial output growth rate, that's for June, and it's expected to accelerate substantially, which is positive news, given that it would imply practically that there was a slowdown for Q2. However, in the final month, we see an acceleration of output, and that would mean, once again, increased economic activity for the substantially large manufacturing sector in China. That would be also very good news for Aussie traders, because the Australian economy practically exports a high amount of raw materials to China to be used in the manufacturing sector. I would be noting also during tomorrow's American session the US retail sales growth rate, which is expected to accelerate and would be good news on the consumption side. Albeit we have to note here that the rise of the retail sales growth rate as such could be a result of the rise of prices and not the volume. So we will have to distinguish a little bit here. It's characteristic that the US industrial production, which is also due out tomorrow during the American session, is expected to tick down. And that's not exactly positive for the US economy. While we also note the tick down expected preliminary University of Michigan consumer sentiment, which may be implying practically a drop in the morale of the average US consumer.
Anything on the monetary front?
Well, we have Fed Board Governor Waller, which will be speaking today in the American session. Should he sound hawkish, especially given the acceleration of the US CPI rates, for June, we may see the US dollar getting some support. At the same time, let me rephrase that, I would be moving forward tomorrow when we have also ECB President Lagarde, which will be participating in the G20 meeting. And I would also be noting Atlanta Fed President Bostic, who will be speaking in the American session tomorrow, while Janet Yellen, which is to make a speech at the G20 finance ministers meeting tomorrow, could actually shake the ground here. It's more on the fiscal front, definitely, but we may see comments which may have multiple effects besides not only US stock markets and the FX market, but also the commodities market, especially oil's price.
Any final comments, Peter?
Overall, it seems that the cautious sentiment is still present, and once again, I would expect that the American session opening would be providing us with more clues about the market sentiment. Should the cautious sentiment intensify, we may see risky assets such as commodity currencies, AUD, the Canadian dollar, and US stocks dropping or having an adverse effect as they're considered overall riskier assets.
Thank you, Peter, for your time and everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
So welcome to the technical analysis part of the presentation for today. In front of your screens you have the US dollar index for our chart. We have to note that the US dollar index actually has restarted to rise slightly. Let me make the necessary adjustments here. There you go. So we can see that the price action has opened with a slight positive gap. And we note that the price action seems about to be rising, maybe even starting to aim for 109.50. That would be shifting the upward trend line more to the right. Remember, it was somewhere here. Didn't seem to be broken, as yesterday we had a slight drop of the US dollar. And on the contrary, it seems to be shifting right now in the European session. I would expect in the American session for it to rise a little bit further and start aiming for the 109.50 resistance line. Please note also that the RSI indicator below the 4-hour chart is nearing the reading of 17 on upward slope, practically also signaling a slightly bullish sentiment for the index. Should the bulls maintain control, we may see the index rising, breaking the 109.50 and start aiming for the 111.40. On the other hand, it would be nice to see the monthly chart here. You can see that the index has been practically at record highs for the past 7 years at least, and that level has not been seen since the beginning of the 2000s. So the bulls may have some cold feet here. It's quite high, and that may be making it a little bit difficult for the bulls to advance further. Should a correction lower take place and the pair stabilizes, then we may see the price action dropping a little bit, breaking the upward trend line, and possibly bouncing on the 107.50. Overall, we tend to maintain the view that a range of prices between the 109.50 and the 107.50 would be more or less a sideways movement here. On the other hand, should the price action actually reach the 109.50 and break it a little bit to the upside, that could be signaling that the bulls are still in charge and the index may advance further. A bearish outlook could occur, not probable, but still a possibility which should be kept under watch. And in such a case, we would expect the USD index to break the pre-mentioned upward trend line, definitely break the 107.50, which provided support here. That was yesterday. And mind you that the same level also provided resistance. That was 3 days ago. Yeah, that was on the 8th. So should the USD index actually start falling, we may see it breaking the pre-mentioned upward trend line as a first sign of a trend reversal. Also break the 107.50 and start actively aiming for the 105.55, maybe even breaking it. Let's have a look now at Euro USD. Euro USD, which remains rather stable. It seems that support at parity level of Euro USD is working. The pair was not able to clearly breach below it. Hence, we tend to maintain a sideways movement between the 1.01 resistance line and the parity level at 1, the R1 and the S1. Any break to either side would practically be signaling a trend reversal, and should the bears take over, given that the US dollar may strengthen further, we may see the price action breaking the parity level and start aiming for 0.9870. On the flip side, should the bulls take over, we may see the price action rising, breaking the R1, 1.01, and start actively aiming for the R2, 1.0210. The RSI indicator is below the reading of 50. Actually, it's at around 39, 38. Let's have a look. That's around 37, 38, 37.8. So there are some slightly bearish tendencies on behalf of the market, but for the time being, parity level seems to be holding ground. Once again, we tend to maintain a bias for sideways movement for the pair between the S1 and the R1. Let's have also a look at GBP USD. GBP USD, which once again seems to be moving in a sideways motion, yet we have to note here that practically the pair is also respecting the downward trend line at its peaks. So a downward triangle seems to be forming here. We tend to maintain our bearish outlook for now, despite support being evident at the 1.1815 support line. Should the bears maintain control, we may see the price action breaking the S1 and start actively aiming for the 1.1640. On the other hand, we could build a case also for a sideways movement, given that cable seems unable to form lower troughs, and the RSI indicator remains pretty near to the reading of 50 for the RSI indicator below. Actually, it's at 40, but still. Should the pair stabilize, we would expect a breaking of the downward trend line and the price action to remain between, let me clear this up, the 1.1935 and the 1.1815 levels. To the upside, and should the bulls take over, would require a clear breaking of the pre-mentioned downward trend line, which would be also a first signal for a trend reversal, as it would be the case in a sideways movement. However, for a bullish scenario, would require also a clear breaking of the 1.1935 and the price action to start actively aiming for the 1.2070 resistance level. So that would mean a movement like here, breaking the downward trend line, breaking the first resistance line, and start aiming, if not testing, the R2. For the time being, though, we tend to maintain a bearish outlook. However, tendencies for stabilization are present as well. Let's have a look now at USD JPY. USD JPY, which continues to move in an upward motion, has broken the 138.50 resistance line, which now has to be turned into a support line. Let's make the necessary adjustments here. Correcting the labels, making a start with, we'll make a start with the support lines. Final support line being placed at 134.45. Second support line being placed at 136.75. First support line being placed at 138.50. First resistance line being placed at 140. Second resistance line being placed at 141.50. And final resistance line being placed at 143. Now, we have to note that the pair has reached practically record high levels. It hasn't seen such a price action since 1998. That's over 24 years. And definitely this could be creating some difficulties for the bulls to advance further. However, the advancement had occurred during today's Asian and early European sessions. We're definitely within the range, or the prices within the range where a possible intervention on behalf of BOJ or even the Japanese government could occur to defend the yen in this case and drive it lower. For the time being, we tend to maintain a bullish outlook though, and we would require clear breaking of the upward trend line for that to change. Should the bulls advance further, despite the possibility of a correction lower here, which is also present given that the RSI indicator has moved above the reading of 70, which on the one hand supports the idea of a bullish sentiment for the pair. On the other hand, though, may also be implying that the pair has been reaching overbought levels and is ripe for correction lower. So I wouldn't be surprised to see the pair correcting lower, breaking below the 138.50. However, I would require for the bullish outlook to continue, the price action to respect the upward trend line. Should the bulls maintain control, I wouldn't be surprised to see the next high being aiming for the level of 140, which is the first resistance level, if not even breach it. And that could be another peak for the pair. On the flip side, should the pair correct lower and stabilize, such a stabilization could take place between the 138.50 and the 136.75. And that would be signaled practically by the breaking of the pre-mentioned upward trend line. Note that the price action has reached and even broken the upper Bollinger Band, which is currently forcing the price action to correct a little bit lower. So we may see some stabilization here for the time being before advancing further. For a bearish outlook, we would require clear breaking of definitely 138.50. Definitely also the pre-mentioned upward trend line, i.e. signaling a trend reversal. And also the breaking of the 136.75 and the pair to start actively aiming for the 134.45. That would allow for the price action to create a series of lower peaks and lower troughs, and for us to be able to form a downward trend line. For the time being though, the bullish sentiment seems to be the dominant one. Okay, let's have a look now at USD CAD. USD CAD, which has been moving in a sideways motion. However, I would like to make some readjustments here. The price action yesterday dropped somewhat here. You can see that. And actually broke just below the 1.2970. And it seems to reaffirm this level as a support line. So let's make the readjustment here. And that would be the 129.35, while the S1, S2 could also move lower. Somewhere here. Being placed now at 1.2835. And I would like to revisit the S1 as well. Now the S1 used to be a support line here. That's a valid touch. However, we have two more valid touches lower. Let's choose these ones. And that would be the 1.2720. Let's make the corrections on the labels as well. $1.2835 and 1.2720. There you go. Note how the price action is currently testing the 1.3075 resistance line, and should the US dollar actually break it, clearly break it, that would be a signal for an upward trend to start forming and the bullish scenario to start building. Also, the RSI indicator has broken above the reading of 50 and is currently at around 60, actually nearing 61. So we may see some bullish tendencies, but for our bias for sideways movement between the 1.3075 and the 1.2935 to change, we would require a clear breaking of the 1.3075 and for the pair to start actively aiming for the 1.32. Should the pair remain in a sideways range-bound movement, we may see the price action dropping once again, start aiming for the 1.2935 support line, yet respecting that level. A bearish outlook, that would require clear breaking of the 1.2935 and the price action to start aiming for the 1.2835, which provided support here, tested here. So that would be a valid level as well. Let's have a look now at the Aussie. AUD USD readjustments will be necessary here, definitely. Okay. Let's make a start with the resistance lines. Placing one here. Support line. Resistance line. I would like to catch these peaks here as well. At least this one. Or even better, this one. And we're lowering. So the sideways movement and the narrowing of volatility, evident also by the Bollinger Bands, which are converging. I felt more compelled to narrow also the resistance lines as well. Let's have a look. The first resistance line now is being placed at 0.68. Second resistance line being placed at 0.6875. And final resistance line being placed at I didn't like that. Let's move a little bit upwards. 0.6995. Let's correct also the support lines. The first support line being placed at 0.6715. Second support line, let's have a recheck on the second support line, where that is based. Where's the touch? Let's have a look again. Should be valid. Yeah, it's here. Yeah, seems to be pretty valid. Also, the S3 seems to be okay. That's H4. So we have a sideways movement for the time being between the 0.68 resistance line and the 0.6715. We made the necessary adjustments and the recalibration to adjust practically to the low volatility of the price action. I would expect the sideways motion to be continued, yet the downward trend line here tends to remind us of the bearish tendencies for the pair. Note how the price action has been forming on a scaled base, practically lower peaks and lower trows, despite some stabilization here. So would expect the downward motion to continue. However, should the stabilization be predominant in the movement of the pair, we may see the price action maintaining this level and actually testing, if not breaking, the downward trend line. For the time being, though, we tend to maintain a bearish outlook, which could drive prices of AUD/USD lower, breaking the 0.6715 and start aiming for 0.6620. And that could be initiating practically the next step lower and a slight sideways movement for some days between the S1 and the S2. On the other hand, should the stabilization prevail, we would maintain practically a bias for sideways movement between the R1 and the S1. For a bullish outlook, we would require clear breaking of the pre-mentioned downward trend line, which would also be signaling a trend reversal. Also, the breaking of the 0.68 would be necessitated, and the price action to start actively aiming, if not break, the 0.6875 and aim for higher grounds. Once again, note how the Bollinger Bands have converged, implying that volatility is lowering. On the other hand, the RSI indicator is at the reading of 45. It's pretty close to the reading of 50, just below it. So that could imply also some stabilization here. On the other hand, you can see that the 200, the 100, and the 20 moving averages are all having a slightly downward slope, with the last one being the most intense, which tend to imply and remind us of the bearish movement of the pair since around the mid of June. Let's have a look now at USD CHF as well. USD CHF, which after breaking the upward trend line, as we had discussed yesterday, seems to be maintaining a sideways movement. It has respected both the 0.9765 and the 0.9860. And that tends to imply that the sideways motion is to continue. Also, there is a narrowing of the Bollinger Bands, which could imply less volatility for the pair. We would maintain our bias for sideways movement between the 0.9860 and the 0.9765 as long as the price action practically respects the pre-mentioned levels. Should the bulls take over, we would expect the price action to rise, break the 0.9860, and start actively aiming for 0.9990. To the downside, we also note that we would require for a bearish outlook a clear breaking of the 0.9765 and for the price action to start actively aiming for 0.9640. Let's have a look also at the RSI indicator. The RSI indicator, which is above the reading of 50, actually it's at the reading of 60. Yeah, it seems to be inclined downwards, which may once again reflect the slight correction in the latest candlestick. It would be interesting to see how the pair behaves in the 1 hour chart. Yeah. So we have a stabilization which is clearer in the 1 hour chart here. And you can see that the downward motion of the RSI indicator aiming for the reading of 50 is more intense. Yeah. The bias for sideways movement seems to be valid here. Let's have a look at the Kiwi. The Kiwi, which has been guided by a downward trend line, actually an intensification of the downward trend line, of the slope of the downward trend line since the 27th of June. Slight readjustment to the upwards. We tend to maintain a bearish outlook as long as the price action remains below the downward trend line. Yet we note at the same time also some stabilization, that the 0.6095 provides some substantial support here. So let's form the triangle. The 0.6095 to be more exact. There you go. Once again, though, we tend to maintain our bias for a bearish outlook with some signs of stabilization for the pair. Should the bears take over, we may see the price action clearly breaking the 0.6095 and start aiming for 0.5990. On the other hand, a break of the pre-mentioned downward trend line would be implying practically a stabilization of the pair the trend reversal from the bearish outlook, possibly between the 0.62, which was respected and aimed for here, as well as here's a support line and here, and the 0.6095, which was tested multiple times here. The bullish outlook, we would require for a bullish outlook practically the price action to reverse direction, break the pre-mentioned downward trend line, break the 0.62, and the price action to start actively aiming for 0.6290. That should sum it up. Now, some of you guys, given that we have CBT's interest rate decision tomorrow, have asked to revisit USD-TRY. So we have CBT's interest rate decision next week. My mistake. That's not tomorrow, definitely. Asked to have a visit on USD-TRY, a pair which we haven't visited for a long time. So we have here a clear upward movement. We're talking always about USD-TRY for our chart here. That could be a little bit lower. We tend to maintain a bullish outlook here. But the question is, given that it has broken the 17 resistance barrier and is now aiming for the 17.60, let's make the necessary changes and let's see how high it can go. Note that there could be high volatility for the pair at any given moment. You can see this here, choppy trading. Other than that, let's have a look at the weekly chart. Okay. So we have no level above 1832 since 2007. That's over 15 years ago. Drilling back to the 4-hour chart, readjusting, placing the first support line now at 19. Sorry. Let's readjust the labels. So we make the final support line being placed at 15.74. Second support line being placed at 16.40. First support line is now being placed at the round figure of 17 Turkish liras per dollar. First resistance line being placed at 17.60. Second resistance line being placed at 1832, which is also the highest level in our chart. And the final resistance line being placed at 19 Turkish liras per dollar. So we tend to maintain a bullish outlook. I wouldn't be surprised to see the price action breaking the 17.60 resistance line. That could be happening practically. Actually, this could be a little bit lower. Oh yeah. Wouldn't be surprised to see the price action breaking the 17.60, possibly by tomorrow in the American session, if not earlier. That would enable or practically pave the way for the 18.32 resistance level. On the other hand, should the stabilization take place, something similar like this here, we may see the price action dropping, slightly dropping, breaking the upward trend line which has been guiding the pair since the, let's have a look, 30th of June, and stabilizing between the 17.6 and the 17 levels. For a bearish outlook, we would require clear breaking of the pre-mentioned upward trend line, a break of the 17 support line, and for the price action to start aiming for 16.40. However, that seems to be quite improbable unless we have new measures from the Turkish government which would be supporting the Turkish lira, something like what we've seen around the 24th of June, 24th of June. That was when practically Turkish President Erdogan and his government announced that they would be more or less not allowing Turkish businesses to have an overdraft in Turkish liras should they have reserves in hard foreign currency of over 860,000 US dollars at the time, almost a million. On the other hand, should the bank CBT, the Central Bank of Turkey, maintain a dovish stance in its next meeting, keeping the rates unchanged at the 1 week repo rate at 14%, and that could weaken the lira given also the high inflationary pressures in the country. And at the same time, any cut of the 1 week repo rate, and we should not exclude this scenario as President Erdogan has vowed practically to lower rates. Even a possible statement by Turkish President Erdogan that his intentions and his government's intentions are to lower rates even further could weaken the Turkish lira substantially and cause the pair to jump, breaking the 17.6 resistance line and start aiming for the 18.32. On the other hand, should there be an announcement of measures which would be supportive of the lira, we may see the price action breaking the pre-mentioned upward trend line, breaking the 17 S1 support line, and start actively aiming for the 16.4 support level. That should sum it up for the day. From all of us here at IronFX, best wishes for solid trading.
Once you have chosen your preferred trading instrument, the next thing will be to set up a plan. You will need to do a technical and fundamental analysis to understand the circumstances surrounding your trading and then decide at what moment you enter the market, on what direction and which volume you're setting your trade. Also, you will have to define at which price you enter and at which you exit the market. There is no such thing as the perfect entry and exit. Stick only to the entry and exit parameters in your plan. Harness the technology available. Set automatic stop loss and take profit orders. Try to set the emotions of greed and fear under control, but have no misconception, and emotionless trading cannot endure, so be conscious about your trading. Maintain discipline and your bottom line will thank you for it the long run. I can tell you, I see so many people on YouTube, on blogs, on social media trying to make videos to show people how to trade. The first thing you need to know about trading is that it has to express your uniqueness. The best traders in the world are the best because they know who they are original, they are confident in their ideas, and they're more than confident to display their uniqueness through their trading.
Okay, let's begin today's session. Right, let's begin today's session. Right, today's session is a live trading session where it's a live trading session. We're going to look at the markets together. Look at some of the nice juicy setups, which could turn out into really nice trades. Last week we actually called I believe it was the Nasdaq. Right, we caught the bounce on the Nasdaq. Right, the US, some people know as US 100. It bounced really nicely. Here, I'll take profit. Right, and we got a couple of other nice calls that we can look at today. Right, so for those of you all who are here for the first time, you can try out the chat section. Right, so for Zoom, we have this thing where there's a chat panel where you can type the stuff. So if you have requests for me to look at any particular currency pair or gold or silver or instrument you want me to look at, just send it in the question in the chat section. I'll do my best to take a look at it when I have the time. Right. Also, let me know if you are looking at it maybe from a longer term horizon or a shorter term horizon. All right. So yeah, it'll be a pretty nice session today. We're trying to make it as interactive as possible. Right, I can see a couple of you guys streaming in. Nice to see you, Isaiah. Right, Alejandro. Right, Lombardo. Right, we got Agu who is here too. Right, nice to see you guys tuning in nice and early. Right, I won't be waiting too long for the rest of the other people to stream in. Right, so let's begin today's session. All right, so as usual, remember that this webinar is purely educational nature, so nothing in this webinar should be construed as investment or trading advice. Please do only due diligence before you guys trade, all right? Alejandro, all right, S&P 500, you're day trader, so okay, roughly know that you're looking at the time horizon. Usually when someone's a day trader, you look at the 1 hour and the 4 hour charts, maybe not anything beyond that. But the S&P 500 is only open for 8 hours in a day, right? So likely we look at the 1 hour charts later. Okay. Now, let's begin today's session. So for those of you guys who are here for the first time, just a quick introduction of myself, right? My name is Desmond Leong. I run an award-winning research firm, Everest Fortune Group. So we're actually finalists for the 2019, 2020 and 2021 for Best FX and Best Equity Research. We've got a strong team of traders over here, right? So we usually work with the major financial institutions and telling them where the markets are heading. But we have a special partnership with IronFX where we will bring you guys the good stuff, the juicy stuff, right? Last week, every Wednesday, we have an educational session, right? Every Thursday, we have a live trading session. So last week on Wednesday, no, I think yesterday, we had introduction to technical analysis, right? Before that, it was, I think, introduction to trading, and it's going to get more and more advanced, right? And if there's any word of encouragement to share with you guys is that, in trading, you don't need to spend 30 years learning. You just need 30 days learning the right stuff, and you can be a better trader, right? I mean, I trade full-time for a living, right? Pretty young, I'm 32 years old, right? Yeah, I'm 32 years old, right? And that's one word of encouragement I share with you guys, that you apply the correct techniques. You can be a great trader, you can trade full-time, all right? But yes, that's the dangerous thing in trading, is that you can, in the world of trading, it's scary that you can learn the right stuff and you can also learn the wrong stuff, right? That means it's not like the world of academia, where you learn the right stuff, and we know the more you learn, the more you read, the better you do, right? In the world of trading, is very different. You can learn all. There are things that can push you in the right direction and things that can push you in the wrong direction. All right. So I'll be showing you some of the key techniques I use in trading, right? I use a lot of Fibonacci, a lot of market structure, right? So we'll take a look at it together, all right? Now, agenda for today, we're going to show you the key approaches we take to trading, cheat sheet, and then a checklist rather, and then we'll be taking on the markets together. All right. So these are some of the checklists I use personally myself when it comes to trading. Now, what this means is that, let me see if I have my little drawing tool over here, right? So I usually look at things like, all right, is there a big horizontal level, right? No, is there a big trend line? Is there a channel, right? You don't necessarily need to take every single one, right, to be a good trade. Rather, it's good to just see how many of it you can take, right? But I try to combine different groups of it. Like, for example, indicators is one part over here, like stochastic RSI. Okay, there's correlation over here, right, where you look at different kind of correlations. Then there are the Fibonacci's, which I look at over here. And then over here, these are graphical patterns. And these are momentum, like death cross, golden cross, natural moving averages. These are momentum. So, kind of like if you have one from here, one from here, one from here, one from here, and one from here, right? That gives you a really, really good trade. But you're kind of combining multiple of them together, right? Multiple of them together to find, to improve the probability of a setups. If I have one, maybe I don't take a trade. But if I have two, I know I put 0.5% on a trade. And then if I have three, I go to 1.0. Then after that, I just keep adding, right? The nicer a trade, the better. The more things, the more check boxes that we check off, right? The more we would allocate to the trade. So that is the concept when it comes to trading. Trading is not binary. Trading is not, yes, I'm going to take a trade. No, I'm not going to take a trade, right? Trading is usually, no, I won't take a trade. Yes, I would take a trade. Yes, I would put 1% on this trade. I'll put 2% on this trade. I'll put 3% on this trade. You allocate more based on your confidence level. All right. So that is my approach to trading. And it makes sense, right? If someone comes from the future and they say, hey, I'm going to tell you that Bitcoin is going to bounce from the 29,000 level right now, and it's going up to $100,000 or 100,000 in the next 1 week, right? If someone comes and tells you that, say, yeah, I came from the future, this is proof that I came from the future, and you're super sure of that, what you're going to do is you're going to sell your house, right? You're going to sell your house, right? And you're going to put all your money into buying Bitcoin, right? And then it's going to go up, right? But that is because you're confident, right? You're willing to risk a big amount, right? The less confident you are, right? Then, you will naturally risk less, right? If your friend tells you that, yeah, Bitcoin is going up to 100,000, right? Say, I'm just a little bit sure about it, right? You're not going to put too much on the trade, right? So that's a concept when it comes to risk management in trading. You allocate more when the trade is better. So it's good to have like a nice little checklist, and you decide how good the trade is before before you decide how much you want to allocate to the trade. There are four main kind of Fibonacci's that we use that you'll be seeing me reference a lot, right? I will just be showing you what I mean. I'll go right here. The four main Fibonacci's are Fibonacci projections, where you got 3 points over here, right? Take a little projection. right? We have Fibonacci retracements. We got a starting point and an ending point. This is just two levels. Fibonacci extension, starting point, ending point is kind of like a Nike tick that you see me using a lot. And Fibonacci expansion, starting point, middle point, and then it projects upwards. Over time, you get a hang of how I use this. So if you see me referencing a lot of Fibonacci, right, just know that yes, I use a lot of Fibonacci. It's very, very tough to use, but if you use it correctly, it holds. I would dare say with a high degree of confidence that it holds the secrets to a lot of profitable trading. Okay, now let's begin. Let's begin today's session. Right, let me just pull out my handy dandy chart. How do I pull out my chart? There you go. Okay, let me just have my trading view charts over here. And we begin looking at S&P 500. So guys, if you have more requests along the way, just send it through. Otherwise, I'll just be going through all the different charts. Right, so S&P 500, I usually have like a whole bunch of stuff here by the site where I just analyze on a day-to-day basis, right? But let's look at S&P 500, right? We probably use this is currency.com, right? So this is the CFD. We're going to look at it here. So usually when it comes to trading, the first thing I do, right? I know you're trading on day trader, so usually hold a trade for 1 day. What I do is I go into the weekly time frame first. Then I zoom out and I see if there is any big level I'm missing, right? Over here, I noticed that, okay, there's no big level, right? Or there's no level that is coming anywhere near. Actually, what I don't like is that the data ends in 2014. Let me try to pull up one with a longer data. This is even less. There's still quite little. Let me see if I can pull up one with. Yeah, this one goes very, very far back. But yeah, it not much information over here. Okay, not much information. Then I go into the 1 day chart, right? I go into the 1 day chart, and this is where things start to get interesting, right? Let me tweak it a bit. This is where things start to get interesting. All right, now before you go into the 4 hour and 1 hour chart, it's important to highlight what we call DKE, daily key elements. You look at the higher time frames, roughly get an idea on what is happening on the higher time frames. Okay, first thing I'm going to do, I'm going to throw on the Ichimoku cloud. You can see this little indicator over here. Traditionally, the Ichimoku cloud comes with a whole bunch of what I call crap, right? It looks like this, and it can be a little bit overwhelming, right? So what I actually encourage some people to do is to remove all of it, right? And only have the background, only plot the little clouds in the background. Because the clouds give you a good indication of the momentum, of the momentum of the market. Let me just cancel that. The clouds give you a good indication. You can see the bounces here, bounce, right? Bounces here, right? You can see that the cloud gives you a good indication. It's not the best way to trade, right? It's good enough to kind of have a good idea on what we call the momentum of the market, right? So this is just to give you a good gauge. You will notice that over here, right, that the price is below the Ichimoku cloud. So you have a natural slight bearish bias on it because it's below the markets. It's below the Ichimoku cloud. Okay. Next thing I'm going to do, I'm going to look at this and see, is there any chart patterns? Is there any graphical patterns that I can look at, right? So I'm going to look at here and say there could be, nah, not sure. No, it doesn't really look like a channel. No, I wouldn't really consider a channel. But yeah, there's a little bit of a descending resistance line there. It's quite far from price. We can't really, it's going to take a while before price reaches that level, right? And then there's a shorter term kind of descending resistance line over here. Okay, you can see a descending resistance line over here pushing prices down. So this would be the more relevant descending resistance line, right? Because price is, kind of reacting off that level. The next thing I look at is we're going to look at horizontal levels, right? So we find a big horizontal level over here. This is what I call a graphical overlap resistance, right? So I'm going to put resistance over here, right? Why is a resistance? Is because of this reason. It's an area of interest, right? Price bounce once, price bounce twice, price bounce 3 times, right? And finally, when it reaches there, it's starting to react off it, right? So it's what we call an overlap resistance, and it's really a great level. Usually it's highlighted as an area, right? So if you have to highlight it as an area, right, it usually is something like this, right? A nice little area over here, right? Nice little area that kind of highlight over here. Okay. So, all right. So we do notice two things so far. There is descending resistance. As you can see over here, there's Ichimoku cloud, right? But let me draw. We have trend line resistance. We got the Ichimoku cloud resistance, and we got the overlap resistance. We've got three things over here so far. Okay. Price also happens to be testing. You draw a Fibonacci retracement all the way from top to the bottom. You notice that there is this very nice 50% retracement over here, right? Price was reacting off this 50% retracement over here. So we got 4 reasons why, you know, price is, let me see if there might be a 38%. Yeah, a bit of 38%, 50% retracement, just about, you know, this area. But I think the 50% retracement is a little bit more relevant. All right, so we got another nice 50% retracement there. And the last thing I'm going to look at is this little Nike tick kind of formation, right? This little Nike tick formation. So that's where I'm going to do a nice Fibonacci extension. And I believe that price might be testing the 12713. Yep, 12713%, exactly where they tend to react. So there's a lot of reasons why price was reversing from here. All right, price was reversing from here. Okay, a lot of reasons, right? We got 4 reasons here. And we got a 5th reason over here, right? These levels over here. We got 5 reasons why price might reverse. Okay, now let me just erase the whole bunch of brushes that I've just drew on the chart. A little bit messy. Okay, so we got 5 reasons why price is reversing. Now I go into the 4-hour chart where we start to look at what I call a tactical view, right? So if the 1-day chart forms the strategic view, you know, it's like a bigger view, then the 4-hour chart is where things get a little bit more tactical, right? You can, you know, you can actually start planning the trade, so to speak. Okay, so what I do is that I roughly know what are big levels. I'm going to erase it all. Now I'm going to erase it all and I'm going to see, okay, what can we expect over here? The most obvious thing I'm looking at, of course, is this graphical level, right? Graphical level. Let's see. I would be confident if, let's see, let me just draw a little ascending support. A little bit tricky. We should ideally, this is what I would call the, it's very tempting, but I would probably look at something like a sell entry over here, because I know that the high time frame, you know, we are experiencing bearish pressure, right? We're experiencing bearish pressure. Nice reacting off here, bouncing off here. Give me a second while I'm just thinking about this. I would be looking, okay, so our natural bias is that, yes, you know, price is going down, 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 down. You know, there's a natural bearish bias over here, right? Bearish momentum. What we are going to look at is called downside confirmation, where price needs to break this level to trigger a move down. Okay, price will need to break this level to trigger a move down. How far down can it go, right? Usually we do a key Fibonacci retracement. I believe, yeah, it's a 23%. This 23%, let me see if I can highlight it for you guys. This 23% retracement, right? In Elliott wave theory, right, it's the key level that needs to be broken first, right, before you trigger a bigger move down. It usually goes down to 38%, but a safe gauge is that, you know, you can go all the way down to 50% over here. Okay, so we would be looking at, in this case, probably looking at 2350, right? I call it 2350 because, you know, we could be looking to play the move down to here as the first level, but only if price breaks this level. Okay, only if price breaks this level, right? That means if price doesn't close below this this 41002 level, right? If price doesn't break below this 4102 level, right, then we know we don't we won't go short. Okay, because it does look like a very nice support, but we do know that there's overall bearish momentum, right? So it's a little bit risky to play the bounce from here, right? So I'll be looking for price to first close below 4102 to trigger the move down to 4100, at least over the next like a couple of hours to maybe a few, at most 2 or 3 days, right? In terms of stop loss placement, if it really breaks below here, you don't expect your prices to if it breaks below, right? If it breaks below this level, over here, we should not be expecting prices to reintegrate back up and hit our stop loss here, right? So that's why we have a relatively tight stop loss, right? So there's one thing I always want to encourage you guys to do is that, when it comes to trading, try to keep a tight stop loss, because a tight stop loss will actually help you improve your risk to reward of any trade setup. Let me just show you what I mean by that. Right, so let's just say we have a short position over here. This is our stop loss here, and this is our take profit. Now, let me just do one thing. Okay, now look at this, risk reward 1.38. That means for every $1 you're risking, you're making 1.38. If you had a stop loss that was further, I want you to focus on this risk to reward ratio, right? The further you move away your stop loss, the less your risk to reward is going to be, right? Moving here, for every $1 you risk, you're only getting 0.5, right? So there is a price that you pay for being comfortable. There's a price that you pay for, having a bigger stop loss, a wider stop loss, and feeling safer, and that is a profitability of your strategy, right? If you're there, if you call a move and it's very accurate and you're willing to put your stop loss very, very tight, maybe to about half here, you notice that your risk reward could be 1:2.86 or even 1:3. And it actually increases exponentially as you go closer, right? What I mean by that, right? See, over here is 1.45, move down a bit. You can see my mouse moving down a bit. It's increasing by 0.1, 0.1, 0.1, 0.1, 0.1. But as it comes down to here, that's where it increases exponentially, right? This one goes to 3.8, right? Goes to 4. Then see, you can see it goes up by 0.2 each time. And it comes down to here, it goes up by 0.4 each time. It comes down to 0.5 each time. So if you're able to call a super duper accurate trade like that, you are risking making 130% on each trade, right? You risk 1,300% each trade. You risk $10, $100, you get 1,003, right? So that the more accurate you can put your stop loss, the crazier your risk to reward can be. Okay, so remember, it's not always about just picking your entry, right? You need to pick an entry, and what's equally important is picking your stop loss and picking your take profit. Okay, now guys, for those of you guys who just stream in, one thing I want to encourage you guys to do is that if you have a request for me to look at any particular currency pair or instrument, just send it in the chat section, and I'll do my best to look at them. Okay, I'll do my best to look at them, and we kind of try to look at a trade together. Okay, now let's look at all the other instruments we can look at. Right, I'll just be toggling through. Right, if any of it comes through, I'll just take a look at it. Right, I'll just tell you how I go through my day to day. What I do every day, to kind of just look through the different charts. So one particular instrument which is catching my eye is this thing called Bitcoin. Right, the reason for that is because when you look at Bitcoin, right, there's this little price over here. There's this little support level over here. Price has failed to break past this a couple of times, right? You can see there's one time here, it tried to break past, 2 times, 3 times, 3 nice big red candles, and now it's a green candle. Looks like it's turning around. It's just turning the corner to try and make a little bounce from there, right? In terms of like Fibonacci structure, right? Let me just see if price is the 61.8 is the key level. There we go, exactly at the 61.8, right? So this is what I call Fibonacci projection, right? It looks like impulse, corrective, and then another impulse down. So it looks like it might have completed its wave over here, right? For those of you guys who are fans of Elliott wave, let me see if I can have it over here. We could be seeing something like a hard to say. It's hard to say, right? A, B, 1, 2, 3, 3 or 5. Corrective, impulsive. All right. Let me just see from here. I believe it could be a nice 127, 138. That's another key level we're looking at. You can see a lot of levels over here. And one more. I always look at this thing called negative 27. Negative 27 is slightly lower, but it's still relevant level, right? So there's a lot of support over here, right? This even goes all the way back to here, right? All the way back to this level over here. So I'm going to call this as the big buy entry, right? This is a longer term tactical view for Bitcoin. If you ever thought, what should we do with Bitcoin, right? Now is a good time to kind of look at Bitcoin, right? It's because there's so many, right? There's so many, there's so much, it's a good level to get in on, right? I think it's one of the lower levels, and look at, if we're wrong, we get out as fast as possible, because honestly, if price breaks this level over here, right, breaks this level, I mean, it goes below 24,000, all hell is going to break loose and it's going to drop pretty strongly, right? But if you're always wondering, like, you know, you always say, you know, I always want to get in Bitcoin, I want to get in Bitcoin, now would be a pretty good level, right? One of the biggest support levels I've seen in a long time, right, for you to kind of get in on Bitcoin. And if it really takes off to 100 grand or 200 grand, this would be the level. Okay. Okay, I see some questions coming here. Alejandro, with wider stop loss, we have to pump our winning percentage, meaning more pressure for us amateurs. Well, not so much. Yes, you are correct. You are correct in the sense that the wider your stop loss, it means that your risk to reward is not as good. When you don't have as good a risk to reward, you need a better win percentage, you know, for your strategy to be profitable. What I mean by that is you could have a hit rate, right? You could have a winning percentage of 50%. 50% over here. If you have a win percentage of 50%, right, you need your risk to reward to at least be to maybe be like 1.1. You need to make a little bit more money than you lose, right? But if your risk to reward is like, if your risk to reward is, maybe I can just move the chart over here. Yeah, if your risk to reward is like 0.5, meaning that you have a very fast stop loss, right? For every 10 pips of profit you have 20 pips of stop loss, right? You need a hit rate of at least more than 75% to make money, right? If your risk reward is like a good, you know, every like 2.0, right? You probably need only a 25%, a slightly more than a 25% hit rate to be profitable. Right, so you notice that depending on your risk to reward, you know, your trading strategy can be different, right? You know, your win rate can be less. Okay, now let me just erase this, right? And let me just erase this over here, whole bunch of stuff, right? And I want to highlight to you that if this is the move that we're looking on Bitcoin, you know, how far can it go, right? Usually, I'll be looking at 23 and 38. Looks like it touched the 23. The first key take profit you can go for is probably close to the 34,000 level, right? So we're probably looking at making a small little bounce from here up to 34,000, right? Ideally, if our so-called Elliott wave kind of count is correct, we should be seeing prices come up at least to the 38% over here, which is the 42,000 level. Right, it could go up all the way up to here. This is a bigger, riskier trade, but if you're willing to hold on the long term, you could have a stop loss, right? Probably about, okay, what I worry is that, you know, why I don't like putting a stop loss right below a major wick over here is that it tends to be a very, very, you know, the whales, especially in cryptocurrency, the whales, right? They are noticing this level over here. A lot of them are noticing this level over here. they're likely to spike. They know a lot of people are going to put their stop loss here. They're going to spike down, stop you, and then go up. All right. So that is one of the risks when it comes to this kind of very, very nice setups, right? So your stop loss, instead of putting it over here, you probably want to give it a little bit of breathing space, put it slightly further, give it just a little bit of breathing space. If you want to fine tune your stop loss by right, what you can do is you can put it slightly beyond the negative 27, probably about here. And you play a bigger move to take profit to over here. So price, give it a little bit of breathing space, all right? So this will be a slightly longer term horizon trade on Bitcoin, right? And I can see that Isaiah is requesting pound yen, right? Let me just take a quick look at pound yen. GBP, JPY, right? So first, longer term horizon, is there anything that the charts are telling us, right? So pound yen, I look at the weekly chart, I just zoom out and see if there's, is there any big levels for me to look at? Nope, there's nothing over here, right? Is there a big graphical level that it might be approaching? Not so much, right? But there is a very, very nice big level, which we need to highlight over here, right? So so it's important. This is what I call a top-down approach, top-down analysis, right? Where it's important not to get blindsided by looking at charts a little bit too zoomed in, right? Because what I can immediately see over here is that price, right, has a big reaction off here. Nice reaction, nice reaction, nice reaction, nice reaction. And it finally broke out. So when price breaks out, it tends to make a nice little pullback to the support, and then it's bouncing up. So this is a nice support level that we need to look at. And there's no way that we cannot look at it, right? So I immediately highlight this nice support level, and I would then look at maybe, just maybe, there could be a bit of a channel over here. Let me see. There we go. Price is in a bullish channel, right? It minimally must touch 4 points, and we can see that price has touched 4 points, right? Touched 1 time over here, 2 times, 3 times, 4 times, 5 times. So we have a valid channel over here. What about the Ichimoku cloud? Price is above the bullish Ichimoku cloud, as you can see over here, right? So we have a couple of things working for us, right? One, price has broken this key resistance, and support. Price is in a bullish channel going upwards, right? Price is seeing bullish Ichimoku cloud support. So we got one reason, we got two reasons, and we got 3 reasons over here why price is, it has a little bit of bullish momentum on its side. So natural inclination is that price should continue to go upwards, right? To have the bullish move. Then we go into the 1-day chart, right? This is zooming in a little bit more and seeing, is there anything we can trade? Anything we can trade on over here? Okay, so what I like, of course, we have a natural, we have the big long-term view, right? Strategic view. Then we start zooming in a little bit more. I always tend to remove all my drawings, right? I just start looking at it again. Okay, so we did highlight that there was a nice overlap support somewhere over here, right? It stretches pretty far back, but yes, nice overlap support. Price is continuing to go up, right? Is there anything over here that is suggesting that price would not be any big resistance? No, there is honestly no big resistance. That's why I can go even lower on the 4-hour chart, right? Any big resistance for us to look at? Nope. In fact, on the 1-day chart and the 4-hour charts, it looked a little bit messy, right? It honestly looks a little bit messy. It honestly looks a little bit messy. The only time when it's clear is actually when it's on the weekly chart. Let me just zoom back up here. Yeah, the only time when we got a clear view is over here. So if I were to call a longer term view on pound yen, right? If I would call a longer term view on pound yen, is that we should ideally be seeing prices. This would be the lowest it will go, right? As price continue to go up, it should not cross below the 156 level, right? This 156 level is a key support level, right? The next big resistance level that you can play to is up here. Of course, the 168 level, right? So this should ideally be the take profit level that you're playing for, right? If you can get in, if price comes back down to here. So when we're talking about trade management, right? I want to tell you, right? It'll be tempting for me to tell you that, you can just play the move up here. But the problem is that price is already moving all the way up to here. There's only such a small movement from here to here. You want to do this thing called buy on weakness. Buy on weakness. That means you wait for prices. You hope that prices will kind of drop down here again. If prices comes down and test this level, you can get in at about the 156 level to play the move up to maybe up here again. Because right now, price is a little bit crap. It's in a little bit of a crappy area. Okay, price is already made a nice bounce. So you can scale in, but getting in now is very expensive because you get in now, right? Your entry is over here. Your take profit is here. Your stop loss is probably all the way down here. It's not good in terms of trade management to get in at this price. So what we're looking at, the key call on pound yen is to buy on weakness, right? Wait for prices to drop a little bit more, and then you can buy from there, right? What is your stop loss level? I'm going to try to draw it over here. I believe prices is actually bouncing off the 23%. There you can see. So your stop loss placement, right? So when you think about stop loss placement, guys, right? When you think about stop loss placement, you need to think that why am I placing my stop loss over here? What is the reason why I'm going to put my stop loss over here? Right? What is the reason I'm going to put my stop loss over here? And that will come all the way back to your original hypothesis of your trading idea, right? If your original hypothesis is that price is in an ascending channel, right? If your original hypothesis is that price is in a bullish channel, price is seeing Ichimoku cloud, price is seeing an overlap support. If your original hypothesis is that, right, that means to disprove the hypothesis means what will prove that you're wrong is that price actually breaks this level, breaks the channel, and it goes down, right? When you're placing a stop loss, if you're wrong, you must learn to embrace that you're wrong. The worst way to ever be in a trade is to be in a trade that you do not know is going nowhere, right? So for example, if you're wrong, how I put my stop loss placement is that I'll put my stop loss placement maybe about over here, right? I'll put it as a stop loss. If I'm wrong, I want to know that I'm wrong right away. I don't want a little bit of wishy-washy, feeling. I don't want a little bit of uncertainty, could I be right? Could I be wrong? Right? If I'm wrong, I just want to take it on the chin and the market tell me, yo, you're wrong, right? Your overlap support, your Ichimoku cloud, your bullish channel is all wrong, right? And then if it breaks this, if it breaks all these things over here, I would just come down, give it a little bit of breathing space, stop me out, end of story, right? I know I'm wrong, it's fine. I take the loss, right? But I know that if I'm right, my risk reward is very great, right? If I'm right, my risk to reward I could be looking at over here could be a good 1:3, right? Risking maybe $1,000, give you $3,000. Okay, that would be the idea if I get it right. What you don't want to do, right, is you don't want your stop loss, you don't want to put your stop loss maybe over here, right? You're like, okay, now I'm gonna put my stop loss all the way down here, right? So if you put the problem of putting a stop loss down here is that what happens if price breaks this level and it comes down to here and it's over here? What are you going to do? Are you going to continue to hold on to your position? Do you hold on to your position and say, yeah, I'm just going to let it hang around over there, right? Then imagine price, all right, comes down, it bounces up a bit, right? Comes down, it bounces up, right? So let me just show you what I mean, right? Oops, can I do the opposite? Oh, there's no way to go opposite. Okay, I'm going to erase some of my drawings over here and show you what I mean by that. So imagine if you put your stop loss so far, right? We are going to use this thing called a ghost price feed, right? Where is it? There's this thing, ghost price feed. Yes. So imagine if prices come down to here and then it comes down to here. Oops. And then it comes down to here. Just kind of fluctuating over there. Okay, it's just fluctuating over here. Let me see if I can increase the color. candles. Let's put it like bright green and bright red. Okay, so imagine if price is all the way down to here, and then you put your stop loss further away to get a little bit of breathing space. Okay, now let me just remove this. Let me just remove this. Remove this. Can you imagine, right? So what you need to do is you need to pull up your chart again and look at this, right? And you need to ask yourself, wow, is there a reason why my stop loss is over there? My original idea, right? What I had originally, my original idea was this, right? I was going to play price to go up. Now prices is all the way over here, right? Maybe it's over here, right? It's just going on and on and on, right? And you're looking at this and you need to ask yourself, why am I even in this trade? Right? Is there a reason? Is there a reason I'm in this trade? Am I just holding on to the trade because I'm married to the trade? Is it, do I have some kind of emotional attachment to this trade that, I'm just holding on to it? Right? You always need to ask yourself, why are you holding onto a trade? Okay, why are you holding onto a trade? Right? So if it does not fulfill your original hypothesis, right? Your original hypothesis was that price was going to touch here and bounce up because there's a nice channel, right? There's a nice support level over here, right? You can see, always try to go back to your original idea, right? This was your original idea. The moment the channel broke, the moment this buy and this support level over here broke, the moment it broke, all right, yes, accept the loss and keep moving, right? Firstly, the longer you hold on to a trade, the more you're paying for swaps. What people like to do is they like to hedge, right? Maybe they open an equal size position in the opposite direction and they hedge their risk, right? But you end up paying double the commission and double the swaps, double the holding fees, right? So just take the loss, take it on the chin and move on, right? So that's the concept with trading strategy, trade management. Always ask yourself, why in the world am I holding on to this trade? What is your original hypothesis? And at what point is that hypothesis not correct, incorrect? Okay, so I hope this gives you a better view on pound yen Isaiah, right? We'll be looking at, if you guys have any other instruments from you want me to take a look at, let me know. I will just put it up and we can keep looking at it. Otherwise, I'll just keep scrolling through and looking at some of the key moves, right? We've got gold, right? Yvonne. Hey, Yvonne, right? I can see you tuning in over here. It's nice to see you tune in again. I think you were here the past couple of times, right? So gold, we're going to look at gold. What can we expect with gold? Okay, man, look at gold. It looks terrible, man. All right, we got gold over here. Super long-term view on gold. This movement here is terrible. Okay, this movement here is just terrible. There's a little bit of support over there, but honestly, the movement there is freaking terrible. Let me see. No key support actually. Okay, let's jump into the smaller time frame. Okay, we can see that, yes, there's some sort of a support over there. Not the best, but there's some sort of support, right? That you can see price has been bouncing, right? Price has been bouncing. Price has been bouncing a couple of times on this trend line, okay? But what can we expect with gold now? Honestly, it's a very hard chart to look at. I'll highlight the key support and resistance levels, okay, to let you guys see how I usually plan these trades. Okay, first thing I want to highlight is that we are in a little bit of a bearish channel. Okay, why bearish channel? Because we are price is touching 4 points. 1 point up here, 2 points up here. It bounced here. That's for a third point, and it bounced over here for a fourth point, right? So the rule of channels is that price needs to bounce, react off it 4 times, right? So we have Algo, right? Yes, this will be uploaded on the IronFX YouTube channel. Oh yeah, guys, right? What I want to encourage you guys to do is the IronFX YouTube. What you want to do is you come over here, the playlist, and we got the Ultimate Forex Trading Masterclass over here. I'm going to send it I'm going to send it over here, right? Go take a look at it, right? I will have the introduction to trading, live trading sessions, right? Live trading session, right? So our live trading sessions are here, right? So everything will be over here, right? So yesterday's webinar will be uploaded here, followed by the next webinar, which is today's webinar, right? So a live trading session, you can watch how I actually plan out the trades, right? And I think one of the key trades that we are highlighting, I just love to show it to you over here, was a US 100. Okay, so for the US 100, let's see what was our final call on the US 100. And just to show you how accurate some of the calls can be, right? I think we were talking about not having a too fast stop loss, right? I think we had a very, very tight stop loss, right? But we're calling the bounce over here, right? I think this is, we're calling the bounce, right? US 100, our bounce was above 11675 and was going to 12900. Okay, how it looks like over here, just let me toggle to US 100 really quickly, right? You can see how it worked out exactly perfectly, right? This was the drawing that we had. You can see that this was the call that we had for prices to bounce from here all the way up to there. I think I highlighted it at a certain point of time. Yeah, this was a move that we had, right? We're calling a really, really tight stop loss, a risk to reward of 1:3 to call the bounce up to there. Now, what is important to take note is that look how accurate our bounce was, right? Look how accurate prices bounce from this level. Went all the way up. I'm going to zoom in over here for you guys. Went all the way up, touched our take profit over here, and then it reversed. So it's all a case of doing, you notice that take profit placement is as important as your entry, which is as important as your stop loss. So, it's important for you not to just focus on the entry. A lot of time trading strategies focus purely on the entry. They're looking at all the reasons why this might be a good entry, right? But then once they give you the entry, they say, yeah, you know what? Put your stop loss 100 pips away, put your take profit 100 pips away, right? That's not going to help you, right? The amount of effort you put into your entry, you must put in the same amount of effort for your stop loss placement and your take profit placement. So for those of you guys who are watching this webinar, right, I want to send you this link over here, right? And what you want to do is you want to watch the part on how I did this analysis for US 100, which is the NASDAQ, right? I want you to analyze it, right, and see how I actually came up with this entry, stop loss, and take profit, and why it worked out so nicely. And it is from these examples which you will better learn, better understand how to make good trades, right? Usually, the 4-hour chart and the 1-day charts tend to be a little bit more accurate. Those that are less accurate are on the 1-hour charts because a lot of things can happen during then. There's a lot more noise, right? So this is a 1-day chart, and I can just show you that, even if you're trading 1-day chart, it can be a profitable swing trading opportunity. Okay. But anyway, back to XAU USD, right? Back to gold, right? This is a bearish channel that we're looking at, right? Prices is going down lower and lower, and I do want to highlight one level. This, to me, it does look like it could be a wave 1, 2, 3, 4, and maybe even lower 5 here or even lower. So in terms of Elliott structure, I'm looking at that. So it looks like we're making a little bit of reaction now. We're kind of bouncing up. In terms of Elliott structure, right? In terms of Elliott structure, let me just draw some Fibonacci's. prices should not, one of the rules of Elliott structure is that prices should not go beyond wave one over here, right? This is the key wave one level, I believe, right? It might be a little bit expensive to get it now, right? So I'm going to highlight this level, this area over here as a key resistance area. I'm going to call it blue area, right? And this would ideally be our entry area, right? We're going to call this our sell entry. This is selling on strength. Waiting for price to kind of come up to here, right? Prices, if this is really the correct Elliott structure that we're looking at, prices should not go beyond this wave one, right? So we can even put our stop loss really, really tight. No, we can put our stop loss over here, right? And we can put our take profit way, way down at where the key support levels are, right? So the danger of putting the take profit down here is one reason, right? Is that there is this irritating ascending support line. If there's an ascending support line, it means that, you know, when prices, if it comes back to here and it continues to drop, the problem is that this ascending support line is going to prevent it from reaching our take profit down here, right? So that is one problem. Right? So what we'll then do is that we will ideally put our take profit maybe, right? We're going to put our take profit maybe about over here. Right, so we don't put it too far away, right? So this would maybe, yeah, maybe up to here to be enough. We're looking to play the reaction from here down to our take profit down there. Okay, yeah. So this would be the view on gold, right? Try to sell about the 1884 level before playing the move down. You got good bearish momentum, right? Got good bearish momentum, right? Good channel resistance, right? I think prices are below the Ichimoku cloud. There's a good amount of Ichimoku cloud resistance pushing prices down, right? And we have a little bit of an unconfirmed kind of Elliott structure that we can expect prices to continue to go lower, okay? So that is the view on gold. We probably have time for one more request, right? For any instrument. If you guys want to send it through, want me to look at any particular instrument, send it now, right? So I can take a look at it. Otherwise, I just kind of just be jumping around the charts a little bit more, seeing what there is. Crude oil over here. Crude oil is terrible. Crude oil is terrible to trade. Let's see if there's what can we see on crude oil actually. Yeah, crude oil is a little bit hard to trade too. But what is interesting is that crude oil could be in a sort of an ascending channel. Crude oil could be in a bit of a ascending channel. So those of you guys who are looking at crude oil, right, got a little bullish channel over here, right? We could be seeing prices bounce up quite nicely. Okay, this is the key support level, what I call magnetic support level. Why is a key magnetic support levels? Because price has reacted off it once, right? It's bounced off it, right? React. You notice that it's really respecting that level, right? And then it's bouncing from it. A couple of key things that I'm looking at over here, right? We got a very nice support level. Could have a buy entry over here. And we have a very nice Ichimoku cloud support over here. Okay, so you're thinking of playing a shorter term trade. Right, I believe this could be a nice 100% Fibonacci projection. Correct me if I'm wrong. Yep, 100% over there. So it's a nice little zigzag that they're looking at. It could be a nice little corrective move from here to here too. I think it's about 78.6. Yep, all about there, right? I have a slight bias, right? I have a slight bias for here for prices to make a small little bounce. Right, we should minimally be able to see prices come up to here again, right? If you're playing US oil, right, we could be seeing prices make a nice little bounce to here, even up to here, right? If you're feeling a little bit more ambitious, you could go all the way up to there. Okay, stop loss placement, you know, can put it really tight over here as one of the key stop losses that you can look at, right? You got a nice bullish channel, you got nice overlap support, you got nice 100% projection, 78.6% projection, and you got a nice 50% Fibonacci retracement, all kind of lining up over there. But what I like about this structure, right? What I like about this the most is this structure over here. It does look like a wave 1, 2, 3, corrective 4, and a 5. So a tip for you guys is that anytime you see this movement, zigzag, the moment you see this zigzag movement, it is usually in Elliott wave structure, it's called a corrective movement, right? These corrective movements tend to happen in wave 4 and wave 2. Wave 4 and wave 2, as you can see over here, right? They tend to happen over here. And when they happen over here, it actually means that price, according to the Elliott wave rules, wave 4 should not go below wave 1, should not cross into wave 1 over here, right? So we should be seeing prices bounce up from here, right? And you can keep, if you play this right, you can have very, very nice risk reward. You can see prices go up even further, but don't need to be too ambitious to play it too far, right? This in itself will be a good enough trade to play for this move over here. So more than the ascending support, right? The Ichimoku cloud, right? The nice overlap support, the 100%, the 78.6, the 50%. A lot of it is pointing that prices we should be seeing a nice little bounce. We should be seeing a nice little bounce on here, right? Yvonne, it's okay that it means most of the webinar, right? Please tune in to this YouTube channel, which I'm going to send to you, right? This is the YouTube channel where we have all the previous recordings. Go check it out, okay? But anyway, guys, thanks for staying with me through this entire webinar. Right, I hope you found it useful. I think some of the key calls that we have, especially one of it will be on oil, right? Making a nice little bounce, right? And of course, we've got gold too, right? I hope you found this session useful. What I want to encourage you guys to do is to actually head over to ironfx.com. Right, I'm going to send the link to you guys, right? Please head over to ironfx.com, go to IronFX School over here. Give it a second, IronFX School, click on webinars, right? So we have a few upcoming webinars, right? And of course, for English webinars, I'm the main guy who kind of do all the English webinars. You can click on English, right? And next session will be Fundamental Analysis 101, right? That will be the one of the links that you want to go for. I'm going to copy the link over here, right? You can go register for the Fundamental Analysis webinar that's happening 6 days from now, right? And of course, 7 days from now, same time, same place, we're going to have our live trading session. Okay, I think next week it'll probably be Cassandra who does the webinar, not me, right? So it is Cassandra, right? This is me, right? Otherwise, yeah, you can, Cassandra should be leading you all next week for the webinar. All right, that's it for me, guys. Thank you for staying throughout this webinar. Thank you, Alejandro, Agu, Isaiah, Potso, Yvonne, thank you all for tuning in, right? Remember to stay safe, trade safe, right? And if any questions, right, you can always send it to IronFX support, or you can prepare them for me next week. Okay, thank you very much. Remember, stay safe, trade safe, and I'll catch you guys next week, right? Thank you so much, Alejandro. Right, take care, guys. Bye-bye.
My name is Christina, and today we will talk about dead cat bounce. One of the popular terms that traders often use is dead cat bounce. The term comes from an old saying in investing: even if a dead cat will bounce if it's dropped from high enough. The expression describes a situation where a security has a short-lived burst for an upward movement in a declining trend. It is a temporary rally in the price of a security after a major correction or downward trend. A dead cat bounce is very difficult for analysts and traders to predict. It begins with a downward move followed by significant price recovery. However, after some time the price doesn't rise anymore and the downward trend continues, falling even further. Because of this, traders sometimes open long position and hope for a trend reversal, which never happens, falling into what is called a bull trap. In order to explain when a dead cat bounce happens, it is good to look at an example. Let's say there is a security name X price at RS10. In the past 7 weeks, the security has been declining and its price fell to R2 level. In the 8th week, the stock rises and goes to RS3, but the following week it falls again to RS1. On reflection, the jump in the price in the 8th week will be termed as dead cat bounce. Dead cat bounce is pricing pattern used by stock analysts to determine whether a rise in the price of stock after a major correction is a reversal of the decline or just a dead cat bounce, a temporary bounce back of the price. Dead cat bounces are usually observed in retrospection as it's very difficult for traders to detect them from a simple trend reversal. More often than not, such a sudden increase can be caused due to bargain buying by traders and investors who may mistake the bottom of the stock price. Short-term traders can take advantage of a dead cat bounce and make profits from the short rally. Stay tuned for more interesting and useful market terms.